Okay, welcome back, everybody. Top of the hour here at 1 o'clock. We're gonna move into our next session here at Farmland Review, when they ask the expert area. Really great to have you here today. Great crowd. We've been having a really nice steady flow of folks coming in and working their way through these topics today. And we're really happy to have with us again this year, Barry Ward. Barry Ward, a good colleague of us, farm office team over at the Fireball Building across the street. If you're looking for some farm management resources and maybe connecting with some of our specialists that we have over there. Barry's position at Ohio State University is a leader for the Production Business Management Program. His focus includes crop economics and budgets, land values, cash rent, rental rates, farmland leasing issues, machinery economics, and of course, the fun topic of federal and state tax issues. With that said, Barry he serves as the director of the income tax schools for Ohio State University, giving leadership and planning and organizing and co-teaching the schools for tax professionals, as well as providing tax education on critical issues for Ohio agricultural sector. So has a great teaching experience and for undergraduate courses at Ohio State, and does a little part-time farming as well on the side to keep it fresh and exciting. So Barry, welcome. Thanks for being here today.
My pleasure.
So let's start things off. Let's start with a heavy hitting question. Your latest prospects on profitability for the majority of our row crops here in 2025.
Right. Yeah. Thanks, Bruce. It's good to see a lot of familiar faces and some new ones as well. Welcome. And I think everyone kind of knows the score, right? As far as the challenges that we're in here last year, this year, and likely next year with kind of the upside down margins or losses in some cases, some people call them, or at least the possibility. And, you know, we've been faced with this since markets started to soften within the last 18 months, where we have had input costs that have been sticky and prices come down for a variety of factors, and margins and finding profitability has been challenging, right? So that's kind of the big picture for 2025. The other big thing is just trying to peg what we're looking at here in Ohio for yields. It's going to be a mixed bag across Ohio. Some of you have had more rain than others. We don't like to hear from those of you who have had a lot of rain in August. We just as soon not hear that story because some of us have not been so fortunate. I think I've had, less than 1.7 in August, and I know areas around that had less than that. So really has hastened the senescence or even death of the crop. So it's going to be a big difference between early planted stuff and late planted stuff as far as the profit potential, because yields are going to be so different, I think, in many of those areas. So that's kind of the picture that I see. Another challenging year for us, Sozin in production, and just trying to find, some ways that we can be a low cost producer without hurting ourselves. That's always the challenge, because we see a lot of these technologies and inputs that will yield some return on investment. However, we talked about this last year, reevaluating things at $4 corn versus $5.50 corn, that takes a little time, and sometimes some plot work and some other detailed work that sometimes we just don't feel like we have time to really take that on.
Well, it kind of leads right into where we're heading maybe for 2026, and as we are starting to plan those input costs for the crop year 2026. The seed staff are out nailing down seed costs and maybe even looking at other inputs, fertilizer, or any input into the crop production. What are some of your expectations for input costs and maybe profitability as we look into 2026?
Right. And I think it's more of the same. We look at prices on out in the 26 and those November beans and December corn, and a little bit higher than where we are right now. We've put a little basis in there. I think we've got about, oh goodness, I can't even remember. I think we're plugged in 1040 beans for next fall, and 440 corn.
2026.
Yes, 2026. So the market's a little bit more optimistic, going out a little bit further. Things can happen. Trade may get settled down a little bit, and that's a little bit of a concern. I'm not going to go into that particular issue because that has other dimensions these days, not just the simple ones that we normally talk about. So, that price point may be a little bit higher than what you're comfortable plugging into your forward-thinking budgets in 26. But inputs, that's something that we're wrestling with, right? And I'd like to hear many of your thoughts too, as we kind of go through this discussion. But is at least what I'm hearing and everything that a lot of it's just anecdotal collection of data right now. Seed costs generally flat, however, newer genetics, newer hybrids, newer varieties. We're expecting those to jump a little bit as we have here in recent years. The older hybrids, the older varieties, flat to maybe even a little bit lower, depending on the company. Chemistry, we've had mixed results in getting real clarity on some of these, and some of you are hearing from some of your chemical dealers. Generally flat, some of these products may see a nominal increase, seeing some products rolling off patent, and may see more generic competition that will help us a little bit. What are you all hearing chemistry as far as your particular contacts? Because this is a work in progress at this point and looking forward into 26. So any thoughts? Yeah, Joe?
You could look for generics to pick up.
Yeah.
Coming out of China.
Yeah. Is it a supply issue or is it more of a demand issue that you're hearing?
Supply.
Yeah, so, okay, yeah. Glyphosate, glufosinate, some of the big ones, yeah, okay, interesting.
With anything coming out of China, so.
Right, yeah, I mean, some of that's gonna be a possible trade dimension, some of it's just gonna be simply supply. Any other thoughts? What are you hearing on chemistry out there in your own neighborhoods? I mean, I don't see big moves there, but doesn't sound like a lot of relief coming, at least in that regard.
Another way to ask the question maybe is, have you observed the performance of your chemistry in 2025? Did we pull back on some of the chemistry costs as a total package? Did you see any weeds escape or underperform in a way that you felt that was probably a reduction I should not have done? Or you feel comfortable that, well, I'm glad I did spend the dollars and water hemp is not prolific in my fields this summer. Any just general thoughts on performance of the chemistry in 2025 for the dollars that were spent? That was a long question.
Nobody wants to talk about weed escapes too much, right?
I've seen a few around Ohio.
Yeah.
There's been a few. Water hemp is one that we've seen.
Still some mare's tail that is getting through in certain fields, I suppose, and that's something that we all deal with a little bit.
Maybe that's something to evaluate as we look at the 2025.
Absolutely.
If I made some economic decisions about crop protection.
I think generally, yeah, the whole Midwest is dealing with more tolerance, more resistance, so product is often key, and sometimes more product is needed, so.
I guess we'd throw fungicide in that chemical discussion and observations as well.
It's a real challenge for us at the university to talk about IPM principles and also be realistic and know that fungicides and prophylactic fungicides are sprayed all over, over corn and soybeans, and sometimes to our pathologists, through their real objection. So it's a difficult situation for us to talk about, but we know that particular cost is increasing across Ohio. I think that we continue to need, at least from the university standpoint, to preach a little bit of not caution, but at least consideration of IPM principles, making sure that there is a real reason there.
So Barry, you mentioned seed, we mentioned chemicals. Let's talk about fertilizer.
Yeah, I think that we need to form a union and all stop buying P&K for a couple of months. So those prices, I mean, we know what the situation is. P&K prices, and especially phosphorus prices, are reasonably high considering some of the margins that we're experiencing right now. A lot of that has down to supply. You know, there's some global issues with MAP, DAP, 1034-0 supply. So I think that's going to continue, at least it looks like from what we know, on into the fall with very little relief. We know that our brethren to the west have got close to record yields. Some of those I states, Iowa, Illinois, on up to Minnesota, and some of those. So even though prices are low, if you get record yields, and some of you are going to have really good yields, especially on some acreage, there's still going to be some consideration to not skimp any in terms of fertilizer applications. So I don't know. I don't see any real relief, at least not significant relief on phosphorus prices through perhaps the end of the year until we get into a potential reset in late winter. Any thoughts out there? Yeah.
Well, question, I mean, a lot of these materials are coming from outside of the country.
Yeah, but the US has a significant amount of phosphorus mining and processing on their own, so we are impacted somewhat, but not to the sense, not to the degree that we would, for example, for potash.
It's one, a tariff for that.
Although some of those have been exempted and are not at the high levels, you know, the Canadian potash coming down, so that's not something that's a huge concern at this point. Nitrogen, similar, you know, we do import some, but we have a lot of different places that we're importing from, and plus we're manufacturing a lot of our own nitrogen here in the US, so I don't see the trade issue being a huge component of that price, but still, it's probably affecting us some. Hard to sort that out.
Well, it's great to navigate those three areas. Let's muddy the water and talk about machinery.
Yeah. Well, which products are you talking about? Oh, okay. Yeah, I think that's generally true across the, at least from little bit of evidence that I have, you know, it's true generally across the Midwest.
All right, let's talk about machinery.
Yeah.
Since we're having so much fun talking about the
Well,
good news of seed chemical and
I think
fertilizer.
the good news is that at least we have seen a slowdown in the inflation of machinery costs. It doesn't seem to be going the other way. You know, the producer price index, which I look at pretty closely on some of the machinery indices that they have, that curve that increased pretty dramatically from during COVID and after has flattened out. Now, does that mean that the next time you go and trade in the same piece of equipment is not going to have any increase? Likely not. You're going to have some nominal increases, but not the tremendous increases that we saw for those 3 or 4 year period, based on whatever you want to assign that inflationary period to. Was it supply chain disruption? Probably some. Was it just an excess of money supply? Maybe some as well. You know, but we've kind of come out of that, especially on the machinery and equipment line, and I think we're going to be, I would say, flat in 26.
Other comments or questions related to the inputs of seed chemical fertilizer and machinery before we get into land values and cash
Well,
rents?
fuel is going to be one of the issues that we might see a little bit of a downtick. I mean, that's not a huge part of your overall cost, but fuel certainly is going to be, well, certainly it's likely going to be lower overall for this next year, and crop insurance likely as well, as prices stay low, and the volatility component of that premium pricing is going to be a little bit lower, and you've got a little bit with the new one big beautiful bill with the premium subsidies on ECO and that other one that I can't come up with right. SCO, thanks. Oh, God. Okay, so those are going to be a little bit more affordable too.
All right, let's switch gears into land values
Yeah.
and cash rents. Potentially some reversing, some softening in some areas.
Keep thinking that, don't we?
Let's talk fundamentals of what might be driving some
Sure.
of those principles of land values and cash rents.
Well, I think there's two big ones, and then we got some smaller ones. The big ones that are they're trying to force values and rents lower, or just these lower margins. It's tougher. So farmers are a little bit more reluctant to bid higher, right? I mean, that's pretty much human nature and business owner consideration. We're not gonna pay as much rent. We're gonna think twice about bidding those up, right? Margins lower. However, there's still some net worth and cash in the sector, depending on how you want to define that, is still chasing farmland, if I can say it like that. We still have seen farms sold for pretty big price tags. However, if I had to guess and really look at the data, it's flattened out, right? And we've seen that from a few different places as far as the data, farmland values. However, they haven't decreased, but more of a flattening. And we probably saw a little bit of an increase last year. I don't know. I'm not predicting a negative number next year, not yet. I think that with the yields that we're gonna have, at least on some certain crops here, with some of the ad hoc and government payments that were paid out this year, I'm not gonna predict rents or values to go down in 26. Maybe flat, maybe 1% higher if I had to guess. We've still got other factors that are pressuring some of your areas, not just for farmland. We've got lots of areas in Ohio, and you farm around some of these that are still buying and building homes. That whole footprint east of Columbus that is resulting in 1031 money that's trying to find a home. I just heard of a farm in northern Fairfield County that sold for close to $100,000, if I believe the source. So this is still ongoing. This is not over. I know the Intel thing slowed down, but some of these data centers and other development are still in play, and I think that's not completely dead yet. So we've got a number of factors that are still putting some upward pressure on values and rents. We've talked about this. We've got a set of farmers that have some owned land and can bid some rents, or at least keep the rents at where they are and still manage through this lower margin, tougher period. We have some newer, younger producers that may not have a family to support them that are gonna probably struggle, and we're already seeing signs of it. I have a lot of rented ground, and margins are even tighter for them. So those folks are probably not going to be in on this bidding more, and they're starting to step away from competing for rents in some of these communities. All right. We also have CAUV to deal with. That's an issue. Go ahead.
Just gonna say, I'm about 10 miles west of Troy, about 3 miles from Dark County, but what side of Troy is in all kinds of.
Yeah.
Even out in my area, there's a lot of doctors coming out there. One guy, had right.
Yeah.
I'm going to farmland renovation. So
Yeah.
There.
Well,
So it's really putting pressure on the land.
certainly. Yeah, it has some impact. How much, it's hard to sort out that whole amount, but Ohio's unique. We're kind of the eastern edge of the Corn Belt here, right? We look from about Lancaster all the way out to the middle of Nebraska. Doesn't look that much different, right? There's a lot of corn and soybean fields, but here in Ohio, we've got the 3 Cs and a lot of other big cities. We got a lot more people. I mean, outside of Chicago, if you kind of isolate that area out, but so that is going to continue to be a pressure. And we didn't even talk about the pressure coming from the recent development of all of the solar and wind activity, solar primarily. Taking up big chunks of farmland in some of your communities, and that just puts pressure on you, right? Especially if you're losing out on a tract of farmland that you previously farmed. But CAUV, that's going to continue to be a thing. However, the good news, even though the counties that are in the triennial update or reappraisal this year that are going to see their property taxes go up next year, this is the last year in this cycle. So next year we should be pretty close to at least par, or maybe even a decrease for those counties as they look at CAV values and property taxes. Now, I've got some colleagues that are convinced that they're gonna completely vote out property taxes in Ohio. I'm skeptical that that actually would happen. But some are convinced that it will. We'll see.
Interest rates are also a factor in this CAUV, as capitalization rate,
Right.
goes into that.
And those higher interest rates that we're seeing go into that formula actually push down the CAUV values. So even though we've seen this,
Give their money to them,
that was my question to my colleagues. But
The question was about school districts generating money for operations and so on from the, well, before we open up that can of worms, let's talk about the OB3 or One Big Beautiful Bill.
Yeah,
There's some
yeah.
tax law changes in there that I wanted you to highlight. I
Sure.
think that are important for farmers and farmland owners.
Right, and a lot of these things have been carryovers from what we were already involved with the Tax Cuts and Jobs Act. So many of these provisions that are in the One Big Beautiful Bill are extensions, and some of these are extensions made permanent now. One of the biggest ones, at least in my opinion, for us as farm business owners, is the qualified business income deduction was extended and made permanent 20%. It's huge, really. That one doesn't get enough press, I don't think, but it's gonna be meaningful. However, it won't affect you. You won't see your taxes decrease. It's just gonna be a provision that doesn't allow them to increase. The one that gets a lot of press is the estate tax exemption, 15 million now adjusted for inflation per person. That was 12, or that was 10 adjusted for inflation, so they actually increased it, but the index rate was around 14 already, so it doesn't, it's gonna be meaningful. Individual tax rates, standard deduction is a little bit higher. Those are just things we're kind of used to. The temporary deduction for seniors, that's new. All right, so that's $6,000. We don't know yet how that's gonna show up on your forms. But anybody 65 years of age and older are gonna be able to take advantage of this additional $6,000, which we think is gonna be basically tacked on your standard deduction.
Okay.
Okay, so there's the other things, additional bonus depreciation, 100% now made permanent, although you have a choice this year, you can select 40% for the 25 tax year if you so choose. Section 179, often you're gonna use one of those two. Now, instead of 1 million adjusted for inflation is 2.5 million with some phase outs. 1099s, now the threshold's $2,000 instead of $600. So you're not gonna have to send those out unless you've got a payment to an individual more than $2,000. The 1099Ks that we thought were gonna come out for anybody that had a Venmo transaction more than $600. Now that's back up to the $20,000 that it was originally. So 1099Ks, you're not gonna have to worry about at least the 1099s. The new piece, one of the big new ones is the gain for sale or exchange of farmland property to qualified farmers. So there are some provisions. You can claim that farm sale over a 4-year period. All right, so instead of taking that whole capital gains hit in the year of sale, you can spread that over 4 years. Now, there's some stipulations. You have had to have farmed that for 10 years prior, and it has to go to a farmer or an individual that's a qualified farmer, and they have to farm it for 10 years after the sale. Yes, so there are some provisions in there that are gonna, trigger some recoupment of tax if you don't go through that. And the way I understand it is that on the deed, they're gonna have to be some kind of a covenant on that deed.
Like a memorandum, almost
something
on
like that.
snag.
Right. So those are the big pieces.
Would a qualified buyer be a family member, or is that it?
I think so.
Okay.
I think
I'm just thinking transition, generational
Yeah.
planning for farm operations and transition of land.
Yeah, the other two big things on tax, and some of you have been hit up on some of these, is the fertility deduction and the R&D tax credit. These are getting a lot of press in the farm communities, and we've got promoters all over the Midwest. Some of them may be in contact with many of you or your tax professional. I would just say move with caution. Some of these promoters are very aggressive, and there's not any bright line tests, and it's all not black and white. It's a lot of gray area as far as how you can claim the fertility deduction, and who can, and what qualifies for the R&D tax credit. Some are gonna say it's very cut and dry. It is not. We just do not have any court cases out there that are giving us any clear definition on some of those things, but those are big ones. I recommend that you talk to your tax professional, your accountant, before you move ahead with either of those two tax strategies.
Anything in the Ohio budget, Ohio tax related?
Well, yes, I mean, at least we still kept the 250,000 business income deduction, which is huge for us here in Ohio. That's still remaining, but the individual rates are lower.
Mhm.
So, and that overall business rate is now lower too. Okay,
Tax planning strategies for maybe wrapping up at the end of the year here.
well, yes, it would be nice if we could take some of these lower income years and assign them backwards, but that only works for the high income years and assign them backwards.
Income averaging,
Yeah, we can't really take advantage of income averaging right now.
cost averaging.
NOLs, net operating losses, some of you are gonna have these, you know, those can of course be carried forward and for farmers a couple years backwards, so. There's some strategy there.
Okay. Plan early, think about it in September, October, November.
Preferably and not December 30th, when you have to make a decision on prepays and buying new equipment.
Help your retailers, help you make those end of year
Yeah.
decisions instead of.
Hopefully, but we know how that tends to happen. Any questions? I think I'm at the end of my time.
Sole administration wants the big corporation companies, whatever, to go from quarterly reporting every 6 months.
Yeah.
Yes, I can't get my head around what is there advantage, disadvantage, or
Well, I think the concern is that, I know that they've also compared it to Chinese companies who have a longer term outlook. That's what their concern is, if their quarterly outlook is based too much on short termism and is missing, the bigger picture of longer term thinking. On the other hand, yeah, the transparency issue is what I've heard is the pushback is we're only hearing from our administrator, our stock, our company administration only every 6 months. Are we gonna be lacking transparency? I think that's a fair question too. And how finding that balance is tough. But yeah, I've heard the same things.
Stay tuned.
Yes, that's a different person that's might want to talk to you on that. Robert Moore and Jeff Lewis have really focused on H2A labor, but I think that's an alternative, and I know that they're also pushing that out for row crop producers. People that haven't traditionally hired H2A labor may want to consider that, especially if they are short labor, but that's a question outside of my comfort area. Sorry.
Let's thank Barry for his work and his time today.